Good morning, everyone. How are we doing today? Michael's one rental at a time, and we have to talk about billionaire Barry. Yes, folks, Barry Sternlicht is at it again. He is doing something that, frankly, you and I have been talking about coming, and we need to ask ourselves why. We should talk about Jeremy Siegel. We should talk about PPI. But first, let me admit I was wrong. Yes, folks, one of the things I love to do on this channel is make predictions, make educated guesses, look into the future. And when I'm right, I celebrate. And when I'm wrong, I own it. And yesterday, we were right to predict a lower CPI pretty much across the board. More and more folks are also writing about CPI being in the threes next month. And if you look at CNBC, they even have an article talking about economists saying that the housing inflation is about to roll over. All of those things I have been right about, and frankly, hopefully bringing you along and showing you what, these things are mathematically going to happen. So we've been talking about them for a while on this channel. So again, I'll celebrate what I've got right. But what I got wrong yesterday was the reaction in the 10-year. I had assumed, frankly, that if we got a CPI reading headline and a drop in CPI core, that the 10-year would roll over, probably 10 basis points in a single day. And, that's an aggressive move, but not a move we haven't seen here recently. But it flat out didn't happen. And frankly, I believe the 10-year was up slightly yesterday. So I like to celebrate when I get things right. And I will, of course, take the L when I got something wrong. So again, folks, for those that want to celebrate me being wrong, congratulations, swing and a miss. I will try to do better next time. Now on to PPI. What's going on with PPI? Again, what is it? Producer Price Index. Why is it important? I look at PPI as a leading indicator to consumer CPI, Consumer Price Index. It's not a perfect one-to-one relationship. There are other things involved, such as margin compression or margin expansion, but it is a leading indicator. And we got another number. We got another good number. PPI, I'll give you the numbers and the expectations. This is actually the 11th month in a row that PPI has been declining. Expectations were for 2.9%. This is kind of the yearly number. It came in at 2.8, so a beat. That is core. Headline was expected to be 1.5. It came in at 1.1. These are the yearly numbers. But now, what about the month-on-month? The month-on-month number for the headline was supposed to be -1, which is true deflation, right? A slower rising is disinflation. A negative number is deflation. Again, a better number. It came in at actually -0.3. So again, expectation -0.1 came in at -0.3. The core number, which is a number that you and I have been talking about being more important both for CPI and PPI, was expected to be up 0.2. It came in flat or at 0. So again, folks, coming into today, which is Fed Day, we will talk about in a minute. I've been saying for months now that they're going to pause. This is the first pause. I know some people are going to call it a skip. I think you're kidding yourself with the data that is mathematically coming next month, with housing rolling over after that. The Fed is absolutely done. That said, they will talk tough, right? They have two tools. You and I have talked about this for months. They actually have the federal funds rate, which they're done, and they have their voice, their message, and they will keep messaging higher for longer, and we should believe them. No cuts coming this year, in my opinion. So again, PPI, generally speaking, good numbers. We're going to talk about billionaire Barry next, but before we do that, I want to talk about an important video I did yesterday, inspired by Sean Cannell and Ryan Pineda. Many of you know I'm sitting here in Vegas. I was lucky enough to meet with Sean and Ryan over the last couple of weeks, and they really kind of had me look at what you and I have been doing here at One Rental at a Time, right? The daily financial news, the millionaires, and all of that. And I was shocked to understand a couple of things. First, you and I, or One Rental at a Time, has done over $1 million. I can't even imagine. And what you will see, what I released yesterday, if you want to go check it out, is we break it down year by year, category by category. Again, $1 million May sound like a lot, and frankly, it is, and above my expectations, and frankly, I had no idea. But what I want you to take away from that presentation is the start. $1 million is fun. It may get you excited, but realize that's accumulation of almost 5 years of, focus and daily discipline. In the first 9 months, right, you will see in the chart, I made $0 and I made 750 videos. Monetization on YouTube didn't come until I think it was March of the next year or February of the next year, at which point I'd probably done 1,000 videos. So could you do 1,000 videos and make $0? We did. I did. Then to go forward in YouTube after, what would it be, 18 months, we made a whopping $1,400. But again, if you go ahead and watch that video, which I highly recommend, it is what I try to talk about on this channel. Focus and daily discipline. Move forward. Don't worry about perfection. Just push record. Go forward. This is how I turned my passion into something. And again, as the title says, it was an accident. No grand plan, no team, no marketing, no operation, nothing. I think most of you could go out and do something around your passion. Now, are you going to make $1 million? Probably not. But you can make something. You could do something. I suggest if you are going to go down the YouTube rabbit hole that you do what I did kind of year 2, and that is find like-minded individuals. The millionaires that we have added to this channel has expanded my reach and frankly made it a lot more enjoyable. Standing in front of a camera doing videos by yourself is hard. Talking with a buddy, talking with a friend is easy. So again, if you're going to go down this rabbit hole, I recommend getting like-minded individuals, scheduling them once a week, and just go for it. So it's a lot of fun. So let's talk about Billionaire Barry. Remember Barry Sternlicht? I think the first time he crossed our radar was about 9 months ago when he went on CNBC with PowerPoint. Yes, I have a special feeling about PowerPoint. I think it is a crutch and overused. But what Billionaire Barry did, and again, he is a billionaire, at least Barry was a billionaire, more on that later. He brought PowerPoint to CNBC, basically begging the Fed to stop raising rates. And as we said in many videos, Billionaire Barry is illiquid. He's got a bunch of assets that are now worth a lot less, and he is probably negative. So what did Barry just do yesterday or the day before? Well, Barry is in so much trouble. He went to his portfolio and said, guys, what can we sell? I think Billionaire Barry and frankly other billionaires in real estate need liquidity. Generally, real estate investors are not very liquid. They are asset rich and cash poor. Billionaire Barry was in such struggle for cash, my opinion, that he sold 2,000 rental homes. You got to remember, Billionaire Barry owns hotels. He has businesses. He has office. I'm sure he's got all this stuff, but he can't sell them. They're worth less than he paid and probably worth less than his debt. So Billionaire Barry needs cash, hard currency. So he sold off his 2,000 homes. So let me ask you this. Billionaire Barry did that for one of 3 reasons. I want to hear from you. Which of these 3 reasons do you think Billionaire Barry sold? 1, Billionaire Barry is calling a top in the real estate market. He sees a top and a crash ahead, so he is getting out in front of it and selling his 2,000 homes because a crash is coming. 2, he realized that owning and being a landlord for single-family homes suck, and he doesn't want to do it. It's too hard, not enough scale, blah, blah, blah. Or 3, he simply needed cash, and housing is the only liquid thing he owns. So there you go, folks. Did Billionaire Barry sell because a crash is coming? Did he sell because being a landlord of single-family homes suck? Or did he just need cash? Let me know in the bottom below. I'd love to hear from you what you think happens. So today is Fed Day. I think it's 11 Pacific. We get the announcement, and 11:30 we get the press conference. I think the big thing today is going to be what's called the dot plot. This is where 18 PhDs or whatever they are get around and kind of give you their opinion of the future. First and foremost, their dot plots have not been historically accurate. So we are not looking for accuracy in the dot plot. We are looking for where their bias is. Is their bias negative or their bias positive? We are absolutely looking for their bias today. And I think what we're going to see in this report is bifurcation. Anytime you get near the top of the range, you actually get diversion. You're going to get the doves and hawks. To date, the dot plot has been rather boring because everybody was on the same side. I do not expect that today. The dot plot is going to be interesting for many, many reasons. First, terminal rate. How many folks see the rate going higher? And if they see it going higher, how much? Hey, Maddie, thank you very much. I appreciate the super chat. You are amazing. Thank you, thank you, thank you. That's very nice of you, very generous. So again, where is the terminal rate going? I suspect many of them will be, we're good. A couple of them will talk about one more hike, kind of the skip mentality, because I think the market is still expecting a raise in July, which is not happening, my opinion. And maybe a couple of them have it up 2. I will be interested to see, does anybody have it going to 6? That will be interesting. Next up, we're going to hear about GDP. Because again, remember, a little subtlety in the last dot plot was the Fed presidents were essentially calling for a recession in the second half. Now, they never said that, but when you do the math behind the Q1 positive GDP and their call for the yearly GDP, it was evident that a recession in the second half, at least a shallow recession, meaning negative growth, was their call. Does that still exist? Or have we pushed that to next year? My guess, again, these are all guesses, is they pushed it to next year, but I will be looking at that. Then unemployment. Where do they see unemployment going? They've goosed it from 3.4 to 3.7. Is it going to 4, 4.5, 5? And not only the number, but the speed, right? What will we get at the end of the year? What will we get at the end of next year? All of these things are very, very important. And then the last thing that I will be looking for is, are any of them forecasting a cut next year? I suspect that none of them will, or if some are, it's probably late next year. The higher for longer is the thesis of the day. And yeah, lots of stuff going on. So another thing that I want to announce here today, we had a wonderful session with the students, how to get started one rental at a time. The initial test run of the 3 amigos with a Zoom call with all the one rental at a time fans who wanted to attend could. It was 100% free. We actually posted the video yesterday at 11 o'clock so you can enjoy it yourself. It was a success. And we have already scheduled next week. So if you are a student of how to get started one rental at a time, the next session you could be a part of for free is 10 a.m. Pacific, Tuesday, and you will get the opportunity to interact with Beth Traverso. Beth Traverso is an amazing resource. She has her own playlist on this channel. She is a top 1% real estate agent. She is an investor. She started real estate investing before she became a real estate agent. She house hacked. Just an amazing story. You will be able to ask her all kinds of questions. If you are one of my students, I have posted the invite in our private Facebook group, and I have sent it via Teachable. So you can get that invite in one of 2 places. So let's talk about something else I read today from Fortune. So we talk about Lance Lambert all the time. He comes on the channel at Thursdays. There's another writer, Elena Botros, who is a wonderful read, writes about real estate as well. She just put out an article which I found fascinating. And I'll give you the headline and ask you to go read it. Again, Elena Botros, a wonderful follow on Twitter. She put out an article talking about 98% of borrowers. Now, this is obviously residential. This is not commercial. 98% of borrowers have below market rates. What have we been talking about for a year? Why did we call the housing crash in transactions? Rates matter. Rates matter. So again, Elena, nice work. Love the article. Keep doing what you're doing. You're amazing. Thank you so much. Back to rates matter. We know 7% stops the market. We know 6% brings demand back. One of the weekly indicators you can follow comes out every Wednesday. Mortgage Bankers Association put out that mortgage applications are up 8%. How can that be? Rates have fallen. It is that simple, folks. And this is why I hope rates settle at 6. I really do. I hope we settle at 6 for a year, 18 months. And the reason I want that is we need to buy time. if we see rates fall because of a recession or whatever to 5%, we're going to go back to 2021 Q1, Q2, which was one of the most unhealthy markets I've seen. So again, mortgage rates matter. We have seen mortgage purchase applications up 8% week on week. So again, very, very interesting. Want to give a shout out to Goldman Sachs CEO. Goldman Sachs CEO basically says the commercial market is effed. He didn't say that. That is basically the net of the article. And he went as far as to say, even if the Fed threads the needle and we have a soft landing, commercial real estate is still effed. And he's absolutely right, folks. We have come into this, and we had real estate billionaires celebrating buying apartments and office and all of that at 3.5 cap. You saw me 2 weeks ago how we could take a billionaire who had 25 or 30% equity in his purchases, how we could turn them into a negative billionaire. That is a net worth with a negative $1 billion. Simply by taking the cap rate from 3.5 to 5 and having your NOI fall 10% or 12%. There are plenty of billionaires, and Billionaire Barry may be one of them, that are on paper not billionaires anymore. These folks who have real estate empires with these low cap rates, they're going to be in pain, even if we don't have a recession. And that was kind of Goldman Sachs information. Then I want to give a shout out to Danielle DiMartino Booth, somebody I follow, somebody I highly recommend following. I think she is amazing. She put out a tweet yesterday that caught my attention. She actually put out a tweet that I had not heard before or thought about, right? I read all the real estate tweets. I shouldn't say all. I read a lot of real estate information, obviously. Danielle DiMartino Booth told you this is when you should buy. She was responding to a homeowner looking to buy a home. Basically, she said, when should I buy? This is Danielle DiMartino Booth's answer. This is her answer. She said, buy real estate when unemployment goes up 1%. Now, obviously, in a tweet, you can't go deep. You can't give the reasons. I replied, and you can follow me at Twitter at one rental at a time. That is one the number, not one the word, but one the number, rental at a time. I said, how could this be? I've never heard this. So in context, if unemployment goes up 1%, that means we go from 3.7 to 4.7. Danielle DiMartino Booth thinks that's when you should buy real estate. But why? I mean, okay, that's a number. I like the call. But why would I buy real estate when unemployment goes to 4.7%? I came up with 3 reasons. These are my 3 reasons, guessing what Danielle DiMartino Booth is saying. I would love to hear yours as well, because maybe I'm missing something. Number 1 reason why Danielle DiMartino Booth may be saying buy real estate when unemployment is 4.7% is that might be the number where the Fed cuts rates. Maybe. Number 2, this might be the reason that inventory grows. Maybe when you have an extra 1% unemployment, which I think is about 1.2 million folks, unemployment will lead to more inventory. Maybe. And then last, maybe what is happening with unemployment all the way up to 4.7% is sellers will be scared and they will lower prices. I don't know what you think about those 3, but those are 3 reasons I am guessing why Danielle DiMartino Booth says buy real estate when unemployment goes up 1%. It's an interesting opinion. You can go ahead and react with the tweet on my One Rental at a Time Twitter page or Twitter tweet storm or whatever the heck these things are called. I am so new to Twitter. It's frightening. I have no idea what I'm doing. But again, you can go there. So again, folks, a lot of stuff going on. And then finally, good old Jeremy Siegel. The stock market's going to rally and recession's going to hit and the Fed won't hike again. So a lot of stuff going on today. Folks, this is Fed Day, Fed Day. So again, lots of stuff going on. If you want to watch an exciting video with actual numbers and see how you can make $1 million, you can look at my video that went out yesterday. Again, I want to shout out Sean Cannell and both Ryan Pineda for giving me the idea to look at what One Rental at a Time has done. Also, remember, really what the point of that is just consistency, right? Again, 750 videos in 9 months and not paid a dime, not a single cent. But when you're consistent, you have fun, you get, your buddies and your friends to join you on this journey. You help people every day. I have fun every day. I am looking forward to tomorrow's daily financial news, and I haven't even finished this one. Yes, folks, I am broken. And then lastly, a couple people asked if I'm still doing this special. I will do the special the whole trip, right? I'm on a trip for a few more days. And what is the special? If you go buy my course, How to Get Started One Rental at a Time, for $3.99, you will get two free courses. And if you buy the Get Your Money Right course for only $99, you will get one free course that are $47, or I say $50. Remember, a lot of you have taken me up on this special, but a lot of you haven't joined the amazing Facebook group. The amazing Facebook group is called One Rental at a Time Works. Trust me, the $399 you spend on the course, it's worth the Facebook group. You get 2,000, 3,000, almost 3,500 people in that group sharing victories, asking questions, networking. Frankly, the $400 is, to get access to a private group, which I monitor, is worth it. So again, buy the course, get 2 free things, join an amazing Facebook group. Let's get after it, because opportunities are coming, but you've got to get ready to be ready. And we are proving it every day. So folks, take care. Again, shout out to Maddie for the $4 or $5 super chat. I appreciate those. Have fun. Take care. We'll talk to you tomorrow.